Okay, good morning and welcome back everyone to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at Options Play, and today is a very important day for the US Democratic government, which is our US elections. Now, there's a lot of angst from investors as to the outcome of the election. However, markets have been fairly calm here over the last couple of days heading into the election, even though volatility indicators have been fairly elevated. We have seen quite a bit of put buying over the past couple of days, typically from my perspective as a hedge for potential volatility of a contested election. But let's go ahead and get started and take a look at where markets are currently sitting and how markets are currently viewing the US elections and what opportunities we potentially see. Now, before we get started, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. Now, we're going to start off by talking a little bit about where we currently sit from an election perspective, as well as seasonality, because I do think that seasonality has been a pretty spot on indicator of where markets currently sit, what we saw in September and what we saw in October. And the outlook looks fairly strong here going into the end of the year, provided that we don't have a strong contested election or a contested election that drags on for weeks on end. Now, we'll then just take a look at the major market updates, where the major indices are currently sitting. We'll look at commodities and rates and what those are potentially telling us. Then we'll take a look at some of the economic updates over the past couple of weeks and some ideas that we have to share with you. And if we have a few minutes at the end, we'll try to answer a few questions here. So let's go ahead and get started. But the primary question that I want to help investors understand a little bit is, how are markets currently positioned for the US election? Now, my name is Tony Zhang. I'm the chief strategist here at Options Play, and I want to share with you my charts, the research that I'm currently viewing here on the markets, to give you a better understanding as to how I'm viewing the US elections. So we'll start off with just looking at the general election tracker. Not a whole lot has changed, but the one thing that has changed is that there certainly is a slightly narrowing of the odds here. Now, the odds still favor Biden by anywhere from 6 to 7 points to a little over 10 points, depending on which poll you look at. So the margin of error and the difference in terms of the lead that Biden has over Trump this year is certainly substantially higher than what we saw in 2016 between Trump and Hillary. However, the odds still are in favor of the Democrats by quite a bit, especially if you look at Congress. Right now, there's a substantially higher probability of a Democratic sweep. But the one thing that has elevated quite a bit over the past couple of weeks has really been the odds of a Democratic House and a Republican Senate. This is, in my opinion, a fairly likely outcome. And from my perspective, the outcome that will likely cause the least amount of volatility. My concern is that if you have a contested election and you have a Democratic sweep, that is what's likely going to cause quite a bit of volatility as markets digest what that actually means. So the outcomes right now certainly skew towards a Democratic sweep with a Biden victory, but as we know, polls are not always accurate, because also we don't vote by popular vote, we vote by electoral college. So there are a lot of concerns from investors as to what the outcome is going to be. More importantly, I'm less concerned about the outcome. I'm more concerned of the path to that outcome. Specifically, we have almost 100 million mail-in votes or early votes. That is going to take quite a bit of time to count. We are unlikely going to get a result tonight from the election results, because some states don't count the mail-in ballots until today. Some of them have a fair amount to get through, and they're unlikely to get through it today. So each state is going to be a little different, and there are plenty of battleground states where we do expect that there's going to take quite a bit of time for votes to come in. So that is what's likely going to cause some short-term volatility as we wait for some of those results. And if this becomes a contested election and has to go to the courts, whether that takes a few days or a few weeks to go on, that is the biggest concern that investors have. And that's part of why, from our perspective, we think it makes sense to have a small hedge on going into the election. But on the good news side, one of the things that we do see is that during an election year, both September and October are fairly weak months. We have seen that here actually in the market. September and October were both fairly weak months, but they are followed by November and December being two fairly strong months here going into the end of the year, specifically December, where 82% of the time it is up on an average of about 1.4%. So a contested election in November is certainly going to put a drag on the performance here for November, but going into the end of year, into December, this is one of the strongest months. 82% of the time, December is up during an election year, an average about 1.4%. So end of the year looking a lot brighter than what we have seen here over the past couple of months heading into the election. Now, if we look at the major markets, the QQQ is currently sitting between a major support or resistance level, 282 to the upside, 260 to the downside. So right smack in the middle of this range right now. It's opening up around 271 right now. So right smack in the middle of the range. At this point, I really think that the election results is likely what's going to be the catalyst that's going to move it either to the top or bottom of that range. With a contested election and any type of rhetoric against a peaceful transfer of power is likely going to bring the markets down. A clear election winner is likely what's going to cause the markets to rally. When we look at SPY is a little weaker, but it did bounce off this major support level around 323. So it did bounce off of that level and is likely going to resume its move higher here. Again, same thing. A contested election is what could potentially break this below that level. Otherwise, a clear winner is likely going to get it back up to that 343's resistance level or the top of that range. When we look at IWM, we talked about this recent strength here above this 160 level. It couldn't hold that level. It broke back down below this major resistance level, which if you look on the weekly chart, has been a resistance level for a long time since the beginning of 2018. So we broke out above it, but couldn't sustain that move. And now it's looking like it's going to try to make another break back above this 160 level. So again, I think we need to see a clear winner for the presidential election and a good understanding as to whether the Democrats are going to sweep. We're going to see a Democratic sweep in order to see more clarity as to IWM breaking above 160. But this is one of the small caps is certainly one of the places in the market where we've seen quite a bit of strength and quite a bit of defense on sell-off. So IWM, I expect, is going to continue performing fairly well. And if we look at the equal weight S&P 500 index, it's actually been outperforming the market cap weighted index. It has not fallen as much as the market cap weighted index, and it has rebounded faster than the market cap weighted index. So this is one, again, this is one of the indicators that we're currently looking at that means that we are seeing quite a bit of strength here from the broader markets. If we look at TLT recently broke below the 200-day moving average. But after breaking down below it, it came back to retest it, fell below again, rejected at the 200-day moving average, but it hasn't accelerated to the downside. So it really has just hovered here around this 158 area. So this is really one where we want to keep watching it because it is in this channel to the downside. So it is clearly in a bearish trend, but the question is whether this bearish trend will continue to accelerate to the downside, or we can see a breakout here to the upside. So TLT is one that I'm paying attention to quite a bit to give us a better sense for how markets are positioning here for post the election. One thing I want to point out here is GLD currently still remains below this 180 support level, which has been a major support or resistance level, but it has not made a new lower low, which is actually encouraging for bulls here for gold to get back above 180, potentially continue moving higher. And the one indicator that's a bit unconventional to look at here for the future direction of gold is actually Bitcoin, which I will actually show you a chart here in 1 second. But for now, I'm going to show you the chart of crude. Crude remains in this downtrend here, but it did manage to break back above the 200-day moving average here. So I expect that it might see a little bit more rally before it continues to move lower here. And crude is one of the indicators that is going to be fairly sensitive to the outcome of the election. We expect that with the Biden victory, you're going to likely see further downside here for crude, while a Trump victory, more likely to see a rally, or at least a short-term rally here for crude, as the different administrations have very different paths, if you will, for clean energy and fossil fuels. And it's going to have a fairly sizable impact on energy shares, or specifically energy companies here going forward. This is the Bitcoin chart that I wanted to show you here. And I think Bitcoin provides a pretty good proxy for the printing of money for stimulus. Now, as you can see, 1200 has been a major resistance level since the beginning of 2019 here. We just managed to break out above this level. We did have, potential breaks multiple times above this 1200 level. We had one here that failed. We had one here that failed. We had one here that failed. So far, this looks like it has sustained that move above 1200. And this partially is driving my views that gold can break out above that 180 level and continue higher, because we have seen a higher and higher correlation between Bitcoin and gold. And this is one of the assets for us to pay attention to here going forward, especially with a Biden and a Democratic sweep. We're likely going to see a fairly sizable stimulus bill for the coronavirus. And that money printing has an effect on monetary policy, and it's going to have an effect on inflation, and gold and Bitcoin are expressions by the market as to expectations for that. So Bitcoin breaking above that 1200 level, from my perspective, is significant for potentially where gold is headed in the future. And we are seeing this reflect also in the treasury markets. Treasury markets managed to break out above the 80 basis points. This is the 10-year yield. Broke out above that 80 basis point level, came back down, and now broke back above it. And now looks like it's going to retest these 90 basis point highs and potentially break out higher. It has already broken out above the 200-day moving average here on the 10-year yield. This is something that Carter and Mike brought up on last week's options action. This is why they took a long position in KRE, the regional bank ETF, which has a very high correlation to the 10-year yields, as regional banks are very sensitive to interest rates. So looking for a breakout here on 10-year yields, you could either use TLT or you could potentially use KRE as an ETF to potentially trade this breakout here in the 10-year rates. When we look at COVID cases, this is part of what's driven some of the anxiety from markets, in addition to the election, is the rising number of cases. The number of rising cases are still continuing at an exponential pace at this point. The only, I would say, silver lining here is that hospitals have been managing this fairly well, meaning with a rising number of cases, we have not seen a substantial increase in number of deaths. Now, this does come to better testing than we had back here. So it is likely that we are simply just testing more and seeing more cases as a result, rather than necessarily a strong growth in terms of cases. Even though the number of cases are rising, 33 out of the 50 states are seeing that their cases are above the 7-day moving average, which means that we are still in a positive growth stage. That is concerning, and the question is, how long will this go on for? Massachusetts has already put together a curfew between 10 p.m. and 5 a.m. Will other states follow? Because if we do see more of a restrictive lockdown, that is likely going to take a hit on the economy and markets as a result of that. So this is one that we are watching fairly closely, is the number of rising cases and the speed at which it rises. Now, on the economic front, we do see some good news. We have personal expenditures actually coming in higher than expected from the survey, and we have personal income actually also rising higher than expected on the survey. This has a fairly sizable impact, in my opinion, on consumer confidence numbers, consumer spending numbers. This is what's driving our economy. 70% of our US GDP is driven by consumer spending. So when personal income and consumption expenditures come out higher than expected, this is really where you have stocks, everything from home improvement stocks to consumer discretionary stocks, consumer staple stocks, that are going to benefit from this acceleration that we continue to see from US consumers. And this has trickled down effects to manufacturing, as we saw manufacturing indices coming out are surprising to the upside here. It's one of the segments of the market that continues to see strength from an economics perspective. So these are, further indicators that the pace of the recovery is fairly resilient, fairly strong, but we still want to make sure that we understand the shape of the recovery is not by any means a V-shaped recovery, even though if you look at some indicators, they certainly point that way, but we clearly see a diverging path between the haves and have-nots. This is the theme of the COVID-19 that we've seen, is this bifurcation that we started to see before COVID-19, but COVID-19 has certainly accelerated this bifurcation, everything from wage gap to the haves and have-nots between lockdown versus reopening trades. These are all bifurcation trades that we continue to see that is likely going to continue well past the U.S. elections and COVID-19. I did want to share with you some of the ideas that we are currently paying attention to, and I do want to say that we want to take a lot of these with a big grain of salt, because the U.S. election is really one of the things that could throw a lot of things out, all technicals, fundamentals completely out the door until we see a resolution or clear winner as to the U.S. election, especially both for presidential election as well as the Congress and Senate, and more importantly, the transfer of power, the actual transfer of power. Once we have that is when we can likely see markets resume perhaps its bullish view. From my perspective, regardless of whether we have a Biden or Trump victory, generally speaking, markets are likely going to respond positively to either candidate. Trump, simply because as status quo, his policies have been fairly strong for the equity markets. If we look at Biden's policies, I think equity markets are favorable to many of his policies, with the exception of his tax and regulation policy. But overall, federal response to COVID-19 and stimulus is what the markets have been asking for. So if we do see Biden with a Democratic sweep, markets will likely also respond positively to that. So regardless of outcome, I'm generally positive on the markets. What I'm what I'm most concerned about, and I think what most investors are concerned about, is really just the contested election and the potentially lack of peaceful transfer of power. But with that, looking ahead, looking at where there are opportunities, one of the places that I continue to look for opportunities is EEM. EEM is the Emerging Market MSCI World Emerging Markets Index. One of the reasons that I like EEM is that it's on the verge of a massive breakout here around this $46 level here. It's just about to open shy of this $46 level. Now, what I like about EEM is the fact that you have really strong relative strength compared to the US equity markets. It's near its all-time highs, or I'm sorry, it's near its February 2020 highs, where U.S. equity markets are quite a bit below that at this moment. And it's near its September and October highs here. So the fact that EM is showing substantial relative strength here compared to the U.S. equity markets is something that we have not seen EM perform on fairly well. So this is an opportunity where if we see a breakout, especially on strong relative strength relative to the U.S. equities, this is one where there is substantial upside here for EM all the way into that 52 area if we look on the weekly chart. So a lot of opportunity here to the upside on EEM. Now, this is one that I do think that I would wait until the election, or at least a bit more of a clearer picture, perhaps towards the end of this week or early next week, to pull the trigger on a trade like this, because again, short-term volatility could put a fairly substantial dent here in a name like EEM. When we look at Visa here, this is one that we brought up here a couple of weeks ago before I took a week off, which was MasterCard. Now, we noticed some recent relative strength decline, and MasterCard saw the same thing in Visa. Earnings recently just came out here on Visa, broke down below the 200-day moving average. This is one where we could potentially see further weakness here on Visa and MasterCard heading into the end of the year. Now, this is one of the stocks that is very sensitive, in my opinion, to the outcome of the election, because it is very sensitive to the size of the stimulus. If we see a sizable stimulus, this is the type of stock that will likely rally fairly substantially. Visa, MasterCard, American Express, Square, these are all names that fall into this particular category. But if we have a contested election that drags on for a long time, this is one where you do see some downside here, further downside, because if we don't see that stimulus and we have a contested election and that drags on for a while, that's definitely going to put a huge drag on names like Visa and MasterCard. We see the same thing here on Johnson & Johnson. A lot of this comes down to the fact that, you know, there's a clear sense that the vaccines are not going to be in place for quite some time, especially, along the issues of distribution. Even though if we get a vaccine by the end of this year or early next year, distribution is a major problem. And Johnson & Johnson has one of the few vaccines that has even a larger distribution problem, because their vaccines require cold storage at a much lower temperature than some of the other names. So they require specialized infrastructure in order to distribute. It's substantially more difficult, substantially fewer companies that have the ability to distribute their vaccine. And this is part of why we've seen some weakness here for Johnson & Johnson. And this is one where I expect to see some further weakness as healthcare continues to decline from a relative strength perspective compared to the overall market. On the flip side, we are continuing to see some further upside from mining stocks, whether you're looking at precious metals miners like Newmont Mining, or if you're looking at industrial metals like FCX, Freeport-McMoRan for copper. We continue to see fair amount of strength here for names like this, and we see breakout levels similar to this type of chart breakout, where we're seeing either mining stocks for industrials or precious metals seeing some relative strength gains here over the past couple of sessions here. So Newmont Mining falling under that category. This is one where both Carter and Mike also brought up a trade here on GDX this week. Newmont Mining is the number one holding of GDX, if not number two. I forget, one of those two. It's number one or number two. And you have a fairly strong move here to the upside here, especially if you believe in the rally in gold. This is one of the stocks that provides a leveraged way to play that upside here in gold. And Newmont Mining responding fairly positively here over the past couple of trading sessions, seeing quite a bit of strength here going into the election. So perhaps some gold buying as a hedge going into the election, or some gold buying as a hedge against what could be a large stimulus package coming down the pipeline here if you have a Biden with the Democratic sweep. That is likely going to cause some volatility here in the markets, regardless of the outcome in the short run, especially over the next few days. If we don't have a clear winner declared over the next couple of days, I expect markets to see a bit of volatility through until we actually have an actual transfer of power here. So that's what we're currently looking at here from the broader markets here. It looks like we're about to open up a little bit stronger here at about 271 on QQQ. Not a whole lot to the upside, so we do have a few minutes here for questions. If anyone has any questions, please feel free to type them into the chat window, and I'll try to spend a few minutes to ask you those questions. Camilla is saying, good morning. What do you think of what's going on with Amazon? I haven't had a chance to take a look at Amazon here this morning, but it's not moving much, so I don't expect a whole lot. This is the same thing we're seeing with most consumer stocks here. It's trading near the bottom of the range. I think right now, most of these consumer stocks is really just holding on and looking for whether there's going to be stimulus. These types of stocks are going to be fairly sensitive to the victory, because it's fairly sensitive to the outcome of stimulus. So Amazon trading near the bottom of that range, from my perspective, I do think that there are some opportunities, especially once you get a clear view of the outcome of the election for this to resume its bullish trend and get back into that higher end of the range. Because as we continue to see a rising number of coronavirus cases, this is going to continue to push lockdown stocks into visibility, e-commerce stocks. And Amazon is just at the pinnacle and the intersection of those two categories and is likely going to benefit from that. Raj is asking, what do you think about wheat stocks with Biden win? So Raj, wheat stocks certainly is one that's on the radar for a lot of investors, but it's only going to, in my opinion, be a potential player here with a Biden and a Democratic sweep. I think if you have a Biden with a split government, you're unlikely to see some significant gains in terms of wheat stocks. And keep in mind that even if you get Biden with a Democratic sweep, it could be a few years before you actually get any type of movement towards federal legalization. So, you know, Biden with a Democratic sweep is the best possible environment for it, but that doesn't provide any indications on timing. And I think timing is more important from that perspective. Pharma going forward, you know, pharma is really, you know, hasn't been particularly strong. If you look at IBB, it has held this 130 level here to the downside, but it isn't particularly strong. So you could potentially look for a potential opportunity to go long here at 130. But I would utilize options to play for that upside to limit your downside here. Financial sector. So like I said, you know, our preference is to play regional banks rather than the big banks, because these are the ones that are most sensitive to the recent move in interest rates. So I would look at KRE over XLF. XLF has things like Berkshire Hathaway, American Express, insurance companies that really have that have very low sensitivity to interest rates, use something that has a much higher correlation to KRE. Citibank, slightly higher than KRE. I'm sorry, slightly lower than KRE, but I would certainly prefer more of the regional banks than the big banks. Is VIX likely to rise over the next couple of days? It's more likely to fall, in my opinion. You know, it's already fairly elevated, but again, if we see protests, if we see rioting, if we see a large amount of, you know, unrest in the markets, and there's a clear sense for that there's not going to be a peaceful transfer of power, is really the only catalyst, in my opinion, that's going to rise in VIX. You might see a short-term rise here, maybe just over the next couple of days, but overall, long-term, you know, towards the end of November, I see VIX moving lower. Any medical stocks related to COVID testing and vaccine that have success tied to one presidential candidate over the other? Alan, you know, COVID cover testing and vaccine. So Quest Diagnostics is one that you might want to pay attention to. They are the leaders in terms of testing for COVID. That would be one that I'd pay attention to. Matt's, your question about AEX. I don't follow the AEX or the Dutch index, so unfortunately I just don't have a whole lot to add there here. So with that covers what I wanted to share with you here this morning. Like I said, important date for our government, important date for our country, important day for markets. So pay attention. Like I said, we're unlikely to see a clear winner here tonight. So be patient over the next couple of days, and don't jump out and every single movement here. I think it's more likely that jerk reactions from the market are likely ones that you want to fade, but look a bit longer term. Wait for the clear outcome of the election before you put a lot more capital to work. And in the meantime, look to buy a little bit of protection for some downside volatility here over the next couple of days, but I don't expect it to last much more than that. So with that, thank you so much. I hope you have a great Tuesday. Have a great trading day, and I'll see you guys here next week. Have a great day.